So let me first call upon our first panelist of the day, Shri G. Anantharaman. Anantharaman ji, a strong proponent of accountability and regulation, has spent more than 3 decades in the Income Tax Department, retiring as the Chief Commissioner of Income Tax. It is important to note here that he played a key role in developing the anti-money laundering draft provisions in the Indian context in the year 1995-96. Joining the Securities and Exchange Board of India as a whole-time member, Anantharaman ji worked incessantly to create an environment of transparency and accountability in the financial system. After serving his term at SEBI, he was appointed Special Advisor to the Chairman at Tata Realty and Infrastructure Limited. Today, he will give us a brand new perspective on the capital market. He quotes, "Regulator is not what it makes of itself, but what the market makes of it." Ladies and gentlemen, please join me in welcoming Shri G. Anantharaman.
Good evening to all of you. It gives me great pleasure to be in your midst, especially on a very happy and momentous occasion of releasing the book penned by Mr. M.R.V., who is a close friend of mine. And before talking upon the subject meant for this evening discussion, I'd like to say a few words about the book. The author is well known, therefore I don't want to talk about the author, but about the book. I'll read out what I have written only yesterday night for your benefit. This is a book which is a curtain raiser. That discussion itself is a curtain raiser for the book. And it is about what? Sense, and sentiments, which epitomizes the quintessence of the market and their crucial role in steering the economy in the growth path. The foreword by John Christensen, Director of the Global Tax Jurisdiction Network, which is in the book, strikes the keynote by describing the book as a wake-up call to Indian society in joining the dots between illicit financial flows, tax evasion, corruption, etc. Mr. M.R.V. tells a much bigger, strong story about how globalization in its current form has undermined the integrity of the markets, the rule of law, and democracy itself. The book shows M.R.V. as a very angry young man in a hurry to cut the scythe across the pernicious elements. He breathes brimstone and fire on everyone in the market, of course regulator in the front line, with an incisive analysis of what secrecy jurisdiction and nameless entities, he calls them peons, have done to undermine the very integrity of markets through doubtful financial flows, what they call round tripping. The book is a veritable treat for those seeking to know the history of participated notes, tax havens, illicit financial flows from secret jurisdictions, etc., and also to track money flows in the last decade, and the lackadaisical approach to track money flows and rip off the secrecy. He has examined the subject in depth before embarking upon this odyssey into the innards and the labyrinths of the financial world, which is at once bizarre and intractable. His anger is understandable, but I would like to suggest that the answer lies in the sobering thought as expressed by the very famous global regulator Andrew Sheng in the foreword to the latest compilation of Dr. Y.V. Reddy, Governor of RBI. There, Andrew Sheng says, global finance has grown from being the agent to the principal, in that it has gone far from being the agent to the principal, in that far from it serving the real sector, it is the real sector which is serving the global financial world. That is very important. But what has happened to what you call the real sector? Nobody talks about the real sector. That is what it is important. We need to understand this reality, and the reversal of this relationship is the key for any sustainable development. In this context, I also want to quote from Ralph Waldo Emerson, which is a famous American philosopher. He says, he summarizes the entire contemporary society. The way of trade and politics are grown selfish to the borders of theft and fraud. The sins of our trade belong to no class, to no individual. One plucks, one distributes, one eats. Everybody partakes, everybody confesses, yet no one feels accountable. We are all implicated. I want to undermine this. All of us responsible for today's state of affairs, not only the stock markets alone. I want to start with this note on the entire discussion. So having said that, let me move on to the today's topic. Our topic is rigged casino. I thought casino itself is rigged. We do require one more rig to say that casino is rigged. Perhaps I thought the organizers of this today's seminar or discussion might have assigned it a greater meaning. I know of Rig Veda. Rig Veda says, let knowledge flow from all directions. That is what Rig Veda says. Perhaps the organizers thought markets also absorbs all kinds of influences. That is why it's a rigged casino. So I put it a wholesome meaning to that. In the rigged casino, the markets absorbs all kinds of influence. That is what the organizers might have thought of while employing the word rigged. And when we talk of markets, what do you think of the market? I think people should know, whenever we talk of market, three things immediately come to our mind. One, irrational exuberance. Two, the risk of manipulation in the market. Three, the market is a happy hunting ground for manipulators, inside traders, and what you call front runners to make a gain. These are the very thoughts which come to us. Have you ever thought of anything possible in the context of markets? No. Globally also this is the position. It's not confined to India. Globally also same is the position. What I want to say at this point, market holds the mirror to contemporary society, values, work practices, governance, and a whole lot of value system that goes with it. Don't look at market in isolation, because the people the market reflects the attitude of people who are operating the market, who is part of the overall microcosm with which we are concerned. It does not have anything of its own. It has a character of its own. On the contrary, it reflects what you are, and it cannot be different from whatever surrounding environs it is located. Therefore, don't look at market in isolation. That is number one. The second aspect which I thought I should elaborate is whether the market is the end game or the final destination of any transaction of raising capital or market trades and all that. If it is so, it is quite okay. But sometimes the market may not be the end destination. It can be only a conduit for something which starts elsewhere, which ends elsewhere. The consummation is elsewhere. With the result, markets lends itself to be misused by so many people. We can call them money launderers, we can call them illicit money flows and all that. So that is the danger. How far we have thought of it, we don't know. So taking the first one first, the market is the mirror unto the society. Then what we have got? We say the society has governance deficit. That is a word recently employed by many speakers of industrial capital. We say there is a deficiency of governance in India. So how do we expect market to have a greater level of governance than what the others have, the surrounding environs have? Then next one which I want to strike upon is exchanges wherein the market operates or the trade takes place only provide a trading platform, of course with risk management and governance models and all that. But otherwise, the exchanges churns out what is fed into that, what is logged into that as buy or sell order. It doesn't do anything more than that, because it doesn't have an artificial intelligence to do some kind of manipulation on its own. So if that is so, we should understand what goes in comes out with whatever what you call processes we have put in motion. Therefore, somebody has said manipulation has become a kind of order of the day. It is very difficult to say whether it is a manipulation or a regular transaction, because both of them have got mixed up in such a manner, it is very difficult to pull them apart. It is all international context as well. And then in this context, again, I reminded of three qualities of sattva, rajas and tamas. So sattva guna, because people can be sattviks. How? When they act disciplined, when they have that kind of food habit, then we call it they are sattvic people, because they have developed these qualities on the basis of their discipline they have followed. We have qualities of rajas and we have qualities of tamasic, all based upon their practices, discipline, and the kind of food intake. Similarly, market reflects these qualities depending upon what it gets, and we cannot blame the market as having an independent character. Today, if you look at the market, it coexists with a lot of unregulated area. Are we aware of what we call OTC, over-the-counter trade, which most of it unregulated? There are many unregulated players in the market globally also, like financial advisors, investment advisors who owe no accountability. There is a grey market. The moment the IPO starts, the grey market starts operating on its own, and it gives the benchmark what should be the listing price on the opening day. So grey market is there. We have debit rates. We have also what you call the mis-selling by the brokers. We have this other thing called projections by the people, corporates, and so many things are operating in the market. Therefore, the market coexists with so much of an area which is totally unregulated. Therefore, these influences bound to have an impact on the market operations. It can't remain in its pristine purity. That's what I want to emphasize. And why people are rushing to the market, especially listing gains. I have seen many people who don't understand the market. They are aware of the word listing gains. I myself was not aware of listing gains. The opening day after the IPO, when the shares got listed and start trading, everybody wants to rake in a big moolah and want to make maximum profit, 100%, 200%. The entire phenomenon, entire activity is supported by what you call grey market operation in certain areas, which also builds up its own benchmark, preparing the ground for listing price. So people are so much interested. That's why today we don't have investors. Investors have become traders. Traders have become speculators. Speculators have become gamblers. So all of us, we are all that. Yesterday's investors are today's gamblers. So that is the position we are in. I want to say that is all we are surrendered about. And another thing is market regulations are based upon disclosures. You know what a disclosure means. A disclosure is supposed to convey the correctness and the full details of what is happening in that particular issuing company. But today we are giving so many details which are meant to what you call obfuscate some of the profound truths. Therefore, somebody said the truth lies between disclosures and disclaimers. Somewhere it lies. We don't know where the truth lies. That is where it lies. And then coming next to this, the fit and proper guidelines. Market operates, the exchanges is the first level regulator. I don't want to expand on that because time is limited. They are the first level regulators as far as the market operation, market supervision is concerned, because market being so vast, it cannot be governed by regulator alone. There is various levels of self-regulated organization which also exercise control and supervision over the market. Exchanges are the same. Like that, there are very many registered intermediaries who are also have cast with a duty to supervise and regulate the market. They are there. But all of them have to undergo a test called fit and proper. If you are not fit and proper, then you cannot participate in the market. You can't be registered as an intermediary. The question some people asked, very mischievously, whether we should have a fit and proper rule for investors as well. I don't have an answer. The audience may have an answer. Because today most of them are investors. They are looking to market for those gains. And then the next issue which I thought is a caveat emptor. All of you know market is one area where the buyers have to be beware. The people who are entering into the market have to be beware of the risk of the market. Recently, Supreme Court in the famous Sahara reality investment decision, they clearly said that the investors are clever. They know what to do, and if they invest in spite of whatever SEBI has said, they are doing at their own risk. That is what Supreme Court said in the famous order while refusing to grant stay on SEBI's order in relation to Sahara's public issue of raising loans. So that is another aspect of caveat emptor in the market. And then governance. What about the governance of the market? Because I am giving an overview for you to appreciate in what kind of environment market operates, which is for us to be very important to understand. Governance, we are overall saying governance is not fully developed and it is deficit in various areas. But if you understand governance in its proper perspective and as required by clause 49 of what you call listing agreement, governance is done through various independent directors, audit committee and whatnot. But have you ever looked at it? That governance model we are having virtually has become an extension of the existing weakness in our system itself. So governance has become an extended weakness, with the result the basic weakness which is present in the system has not been properly addressed. That is one area where we need to devote major attention. And then people say, why not more regulations in the market so that we can tighten the market and bring about a culture of discipline? It is not possible. The moment you start tightening regulations in the market, you stand the risk of losing the business here, because today we are in a global world. If the business cannot be done here, people will go to Singapore Exchange or wherever, other exchanges, wherever the bar is lowered. Therefore, they will find outlet to go out of a jurisdiction with a weaker control and weaker regulation. So that is another danger. So we can't be very, very firm also. And another thing is regulatory intervention. In times of crisis, you know, most of them ask for the jugular vein of the regulator. Where is the regulator? Whether the regulator can really intervene at that point of time, bring about an order in the, in the market, in the overall economic scenario, it is very difficult. Any intervention at that point of time needs a kind of clever, very careful handling of the situation, because if you are going to really take on a institution, a company with a sizable market share, then you are not only affecting that company, but also along with them, the stakeholders, all the stakeholders associated with that company, virtually it becomes a punishment to those stakeholders rather than on the corporate. This is a very important thing one has to remember whenever a call is given to take on big institutions. About this, I think the present chairman of SEBI mentioned sometime back in December. I will read it out for your benefit, and it is quite interesting. He said, big companies are a challenge to regulate. Big entities can create big mess. It is a global phenomenon. This is more difficult to handle because these big entities have big persuasive ability. Their political and media access is tremendous, and therefore regulators are going to be at the receiving end whenever they try to do something about these entities. This is what the regulator said recently on December 16th, which came in some papers. Therefore, it is very difficult to take on these people. But Adam Smith said long back, the biggest safeguard in any financial transaction, including the market, is the counterparty surveillance to the deal, transaction. If the other side is going to employ all the due diligence, he is going to exercise his counter surveillance, then he will not be cheated, he will not be hoodwinked. But unfortunately today, that element has totally gone, especially when we talk about irrational exuberance in the market. It almost blunts our judgment, it almost blunts our intelligence. Everybody follow in the herd mentality to invest in a particular share or whatever investments that they feel in that particular suspended belief or animation. So what happens in irrational exuberance, everybody gets adrenaline charged, and the response becomes totally reflexive without any thinking. That is what happens. And very important in a group dynamics, some behavioral scientists have studied a group, and in a group the dynamics like this. If everybody wants to behave fairly in the group, nobody wants to play foul or play nasty with others, provided no other person in the group also prefers to do that. So if somebody is going to cheat somebody in a group, the person will like to cheat that person by his own preemptive action rather than getting cheated. That is very, very important. That is part of group dynamics. Behavioral scientists have studied that everybody in a group doesn't want to be cheated. If there is a chance that is going to be cheated, he will first cheat others so that he doesn't become the victim of others cheating. That's very important. Therefore, that is how the entire thing functions, and that is also the background. And another thing is, I mentioned about this, whether the market is the ultimate destination or is only a passage for certain transactions. I think we don't have any empirical evidence as far as the Indian stock market are concerned whether it is harboring any such transactions. But internationally it is acknowledged that markets are capable of being abused for money laundering purposes, for transiting questionable transactions, and also for providing a shelter or a parking place for illegal financial flows. So that's why the regulator cannot look at the origin of the money, because where from the money comes, as far as the market transactions are concerned, the money comes into the market through banking instruments, through a banking channel, and it is presumed the bank would have done its KYC on the person who is taking the banking instrument and using it for purpose of using it in the market. So it is presumed that it goes through a KYC. Ultimately, when it goes through out of the market also, it is presumed that is going for a purpose which is not injurious to the health of the economy or market. But unfortunately, these are all firm beliefs and presumption. Nobody has a credible evidence to show to the contrary as far as the market is concerned. And in this contest, I would like you to take you through the book Sensex and Sentiments. In that it has been mentioned in page 278, this issue has been dealt with. Mr. M.R. Venkatesh has quoted the earlier chairman of SEBI as regards the money flowing through the market. That portion says, money is coming through banking channels. Is it money that has escaped tax, gone overseas, come back? This is something that SEBI cannot say. It is beyond us to check the quality of money coming to the markets. All that we know is that it is coming through people who are supposed to know their clients, including foreign institutional investors. It is beyond us to check the quality of money coming to the market. That's what it was said. Therefore, it will not be possible until there is a multidisciplinary investigation. SEBI alone cannot do, because the source of money, the end user of money falls in different jurisdictions. Therefore, it calls for a multidisciplinary exercise like FinCEN, Financial Crime Enforcement Network in USA, which coordinates all kinds of criminal investigations and then gets a result. We need to do something to that extent so that it really bears fruit. Otherwise, we don't have much of empirical evidence to show, excepting to suggest market can be misused for such purposes. And then, if having said that, see, what is happening is today, the frauds are nothing new as far as the markets or the financial world is concerned. Frauds have been in existence ever since. Maybe the human being, they say, in the Vamana avatar, when Vishnu took the avatar of Vamana, he cheated Bahubali, because he wanted only 3 steps, land worth of 3 steps to be given, but with 1 step he measured the entire earth, with another step he measured the entire heaven, with the 3rd step he doesn't know where to place. He said, I have to place on your head only. Accordingly, they say the first grains or first seeds of cheating was there in Vamana avatar. That is what people say in a mischievous way. So cheating and fraud have become an integral part of human ingenuity and human system, and wherever it is. But what is the difference between the past and present? Even Isaac Newton has mentioned in 1720 after South Sea bubble, what he said, I can count the movement of heavenly bodies, but I cannot really count and predict the human behavior. In the stock market, Isaac Newton lost about 20,000 pounds in those days in a market operation. So that is the background. So, but what is different? In earlier days, the what you call the fraud was occasioned by a kind of greed. It is a need-based greed, and it is a plain vanilla fraud. But today it is a very complex fraud, and the complexity is going through layers, structures, and go through various processes with the result where it becomes very difficult to unravel, dissect the entire mechanism of that fraud. So, and what is more important, somebody who has observed the fraud, they said there are 3 things happening in a fraud. Number 1, when fraud takes place in an organization, it may be due to what you call there is an incentive to commit fraud, or there is a pressure to commit fraud. The second thing is the checks and process in the organization are so lax, or become so weakened, people can easily override those processes and commit a fraud. But the third thing is more important. What does it say? In an organization where fraud is committed, the people who are committing fraud, especially in the present day context, it is all done by pathogenically warped minds. That is very important. What is a pathogenically warped mind? The person committing fraud doesn't recognize that he is committing a fraud. That's very, very important. On the contrary, he feels he is doing a service to his stakeholders by inflating the numbers, by enabling them to get greater dividends without realizing all this is artificial and fictitious, and he believes that he is doing a service. These people are called, these minds are called pathogenically warped minds. That is why these are more dangerous than the people who knows that they are committing fraud, and then perhaps they can be brought around to believe that what they are doing is not correct. But with these people, it's very difficult. That is what this thing says. And then having looked at it, the whole gamut of the issue, and in the market situation, one thing I want to make it clear, are we addressing the problem rightly? I am concluding my speech. Are we addressing the problem correctly? Are we looking at the genesis of the whole issue? Are we also tracing it to the very culmination and see where it ends? But unfortunately, we are looking at segments only, where we feel the people are getting cheated, or where we feel the fair game is not taking place. But according to me, we need to look at the entire gamut of the operations, the financial world, and not merely confining ourselves to one segment where certain things are happening or just brought to our notice. in this context, I am reminded of a story of Mullah's story. What happens? A mullah was returning home after evening prayer, and it is a village, and he saw many people in the light, electric light, looking for something. He asked them what they are doing. One of them said he is looking for a key of a particular house. One of the friends has lost. So we are trying to locate the key, whether it is located here. And he also joined the search. All of them were intensely searching the entire place. Another 2 hours passed, nobody could locate the key. Then he asked, what are we doing? There is no key here. What happened? Really tell me. Why are you searching here? Then one of them came forward and said, actually this person lost the key in the field, but there is no light in the field, therefore we are searching it here. So that is what we are reduced to. Are we looking at the problem where is to be looked at? Or are we looking at segments where it is convenient for us to look at it so that we can, forget the problem, or we can find a solution to the problem. Therefore, what is important is to understand the problem, address it at the beginning itself so that it does not become a grave concern to us. And according to me, the market, whether it is regulated or not, is a casino or not, it would only reflect what we are, and until there is a radical transformation in what we do. Today's compliance, it's the seeming compliance. I want to say it is not a genuine compliance. Today the struggle is not with compliance and non-compliance. Those days are gone. Compliance versus seeming compliance, because we have created special purpose vehicles for compliance, while the main vehicle, which main organization or main corporate which should comply with, is kept out of compliance. With the result, we have created special vehicle for every purpose. That is only a seeming compliance. Unless until this eternal struggle is resolved and seeming compliance shifts to real compliance, then only we can see a lot of improvement basically in our governance, transparency and all that. I want to thank all of you for giving me an opportunity, and I wish that this discussion takes us to really fruitful heights. Thank you very much.